Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. It's April, I think it's the 10th, April 10th, and this will be our chart lesson for today. And another big bearish day. You can see we still recovered some of it, not quite the recovery we had yesterday, but we did recover some of it. Most of this sell-off, actually, the lows were actually, I believe the low. Well, I'm not sure if the lows are made on the news or not. If we rallied some and then made another new low, we'll have to wait till I look back over. I can't quite remember, but we lost 100 points in just a few minutes on the CPI news, which didn't surprise me really. If you go back and look, just about every CPI announcement they've had, they come back and revise them later, and they're always worse than what they announced. And so they just won't tell the truth about the economy. And I mean, it just is what it is. They're not going to tell us the truth. And so don't listen to the news. Don't do your own research because you're not going to get the truth. They're not going to tell you the truth. Inflation is roaring. Uh, Assets are appreciating. Uh, Everything, groceries, gas, clothing, everything you use, all your basics are up 15 to 20% since Biden took office. And this is not a political thing. I'm just telling you that, that's the basic truth. And it's worse than what they're telling us. And you watch, they'll probably go back and revise this one. It'll probably be worse than what they announced this time. But the market was looking for a drop in inflation, and instead we still had another tick up. And this market had built in about at least two rate cuts into the market, and now it's pretty obvious they're not going to be able to cut rates anytime soon. And so really the Fed is between a rock and a hard place. Inflation's roaring. They can't they can't drop rates. They're probably going to end up having to increase rates, maybe. Who knows? So we're kind of stuck between a rock and a hard place. They've got themselves into a bind. And rather than tell the public exactly how bad it is, they make these reports up and they put them out, and they're not, and they cull them back some. Basically, is what they're doing. And you watch, they'll go back, and you don't hear anything about the revisions. But if you go back and look at the previous reports, they go back and revise them, and they were actually worse than what they told us. And my guess is this one's worse than what they told us too, and it's still not good. So anyway. That has to affect this market, but they're not. I just don't see any way they're going to allow this market to have a major sell-off before this election is over. So they will do everything they can to prop it up, and so it's all an illusion. You don't know. All we can do is follow the price action and go with it because you don't know what's real on here and what's not, and it's just that it's just a simple fact. And so I talked about this morning just real briefly. I told my son about a year ago, this is exactly what happened in the 70s. And I was a kid in the 70s, maybe, I was basically a young teenager in the 70s, but I remember it well. I remember gold, and the main thing I remember is my dad talking about how much real estate went up. And I remember him talking about he bought his house in the late 60s for $13,000, and then within a couple of years during the 70s, it doubled in price, more than doubled in price. And we've already kind of seen that already in real estate. And now the gold and silver starting to move. They broke through their ceilings, and so basically what I told my son was figure out exactly what happened in the 70s and just and mirror it and those investments, and you'll probably make yourself some money off of just knowing what happens when inflation rises. And that's what's going on. We're reliving the 70s now, and I think we've got a ways to go before we're going to be out of the woods. So I'll share that with the rest of you. If you don't have any gold and silver, it's not too late to buy. I think we're just in the very early movement of that breaking out. So down the road, you're probably going, if you bought some tomorrow or today, you're probably going down the road, wish you'd have bought more of it. And So I suggest those are my suggestions. And the thing is, we've got things like crypto. We've got new investments that we didn't really have then, especially with the cryptos. I was late to the game in that. I didn't believe in it. I was very wary of it, but I finally gave in about a year ago because I knew that would probably be another possibility that the cryptos, especially after they had their big crash, and so they were more affordable again. So I invested in some of that, and they've already doubled and tripled since I've done that. And so they're just ways to diversify your portfolio and not have everything in stocks and bonds because neither one of those are doing very well right now. I don't know what bonds probably jumped today because of that. Treasury bonds, I'm sure, probably jumped because the market's down so hard. Um, so there's just other ways you can invest and diversify. And so do your research. There's probably other things I'm forgetting from the 70s that boomed, but I know the real estate and the gold and the silver were the big ones. And if you own any of those before the big boom of that in the 70s, you probably made a lot of money. I mean, I just remember everywhere you turned, they were having people were always advertising, we buy gold, we buy silver, we buy jewelry, and I imagine that's coming again. So if you aren't already seeing those advertisements, those ads, you'll probably be seeing them soon because the general public is not really rolled back into all this stuff. A lot of it's been the government's buying and that type thing, and the smart traders that are always ahead of the game. But the general public, I don't think has really started buying, and when they start buying, that's when the boom will come, and it'll probably be a bubble, and it'll get to a point, and at some point it'll burst, and it'll all come crashing down again, just like it always does. And but anyway, be aware that of the inflation and the numbers, and that's what's creating this market turmoil right now, these big sell-offs. So um, I didn't mean to spend 7 minutes on that, but I think it's important that everybody, for some people that don't understand that you hear that. Most of you probably already know this. You're probably hearing it from if you subscribe to any kind of analyst, they're all talking about gold and silver and have been for so long that people don't hardly listen to them anymore. But you better listen this time because it's coming. And you can already see it. I don't know what gold or silver did today. I haven't looked yet, but my guess is they probably jumped considerably. Okay, I just decided I'd look real quick, and spot gold spot price is at 23.4760, up $37.80 for today. Big bump, big jump. I figured it probably would be. And this is an interesting one. Silver is up to $28, and it jumped 77 cents. I think silver is still way undervalued compared to gold. If you look at the historic ratios of those two, Uh, they've had a hard time getting silver above $25, and now we're $3 and something cents above. So they both burst through their ceilings that have been holding them back. Um, Platinum, $981 an ounce, up 23.70. I don't really know much about platinum and palladium, but they're both all up about 25 to 30 bucks a piece. I'm a gold and silver guy. Been investing in those for years and years, so uh, it's only that's God's money in my opinion. That's the only real money there is anymore is gold and silver. So when the dollar dies, which is it's coming, if we don't fix things, you want to have as much of that as you can get your hands on. So it doesn't hurt to buy it up. But anyway, let's get on to the chart lesson. You can see the big bearish day. They still bought, recovered it some, but nothing. Usually they like here they took all that big sell off back. And they tried, but they couldn't do it today. They couldn't bring it back. They recovered it some, so it wasn't quite as bad a sell-off. But you see it right there. Still a big, ugly, bearish day. Let's flip over to the 2,000 tick chart and see what it looks like. And here it is, and you can see this big, ugly. I mean, it's not pretty. And you can see we dropped in 40 minutes, we dropped 108 points. 40 minutes and 57 seconds. And that was the low of the day, the actual sell-off from the news created the low. Well, let me move over here. Yeah, it created the low of the day. They tried to test it a few more times. Couldn't really get it back down there, but they couldn't take it higher either. We had a slight correction, maybe about a 50% correction here, and then it sold off trying to make a retest here once again, and it just stayed in this little range here, and it's not consistent. There's maybe a few consistent lows here, but it wasn't real consistent, so it's not the easiest type of day to trade. Anyway, there's the big picture, and it's pretty ugly, as you can see. But let's zoom in here. There's quite a few trades here. You had to be patient because there wasn't anything very early. You couldn't really get in this sell-off because you needed to be flat. And, you know, you see if you were short, you got stopped out. They run all the stops first, and then it crashes. So you just can't trade this news unless you're willing to risk, you know, thousands and thousands of dollars. And it's not worth it. So just be flat. And you really couldn't start trading till about 7:40 this morning. There's just not anything in there anyway. But I think you needed to wait till it settled down, which is about 10 minutes after the news. The news came out at 7:30. So, you know, you got to be patient. You couldn't really trade. There wasn't anything happening before that. So you just had to sit tight. But even after you can start trading, there's just not much here to trade. You got a trend up. There's a second entry here, but no signal bar. Then you're working down. There's no real good setups here. There's one trade here that you might consider. If you look, you got a new high and you get a first entry. But you get your second entry here that fails, but it tries to go higher again. And you really could call this a double top. So a first entry, second entry, you could call that a failure, but you're almost going short at the very low of the move because there's not much room between here and there. And so it's a possibility. It was real tempting. I almost took that trade and talked myself out of it. It would have worked, but you know, it's not 100%. So you can see how congested that is across there. Same thing here. It's just too congested. And then finally, you know, you possibly have you get a bounce here and then it comes back. And this actually, it's hard to see this because it's all so small. Let's zoom in here a little bit, but you can see it ticked lower and failed and turned up. That obviously looks like either way you've got your break of this and a new low and then a higher low is what this is. If you wait till this closes, you probably don't want to take that trade. I kind of like taking it on the engulfing bar just because it's going to trap people. We're a good bit away from the EMA, and you got some congestion here, so it's like a little failed breakout, and then you got the little break lower that's guaranteed trapped a lot of people. And so maybe you take that trade. It's aggressive. It's not for new traders. It's not for people learning. They're trying to get profitable. It's for people that know what they're doing. So I about decided I'm going to start marking all those trades green. Reversals and things, if they're advanced, I'm just going to mark them green, and that way there's no confusion and people can't act like they're confused or say they didn't hear me or whatever. If there's a green trade, it's not for new traders, period. If you're trying to get profitable, you don't want to take any green trades. Skip them. But you can pay attention and try to learn them, and you want to learn them those organically, basically. So anyway, we're just chopping around, and there's just, you know, you got a little double bottom here, but it's the first entry, and then you make a little higher. You know, there's just not much going on here. There's just no way to really enter this. You do get this one up here that breaks higher and turns down, but again, it's a first entry, but this is sideways congestion, so it's probably going to come back again. So that's another one you could argue for green. Again, I don't know if you want to go short way down here, but you might trade that on the engulfing bar, and that's mostly green. I like that on the engulfing bar, but I'm going to mark it green again. There's a lower high here, but not much room to the lows. It's just a first entry. Here you finally had a triple test, but the signal bar is no good. You had this big engulfing bar, but there's nobody at all there. Don't trade an engulfing bar on those; you'll get burned. As you can see, there's just nothing here. They're first entries. They're congested. I mean, the market doesn't know what to do here. That's basically the bottom line. Now, there is a failed breakout here, but we're still in this channel, and so you may get it may hold and keep going, so you can't risk that. And you do get a lower high here, but it's too close to the EMA, which we don't usually, normally you don't worry about the EMA too much on a range day, but in this case where you've had a trend up and you're trading back this close to the other low, and you want to pay attention to that because you can see everything's bounced off the EMA here. So it could happen again because we're still playing this trend a little bit. Turns out it doesn't come into play. The market's not strong enough. And we come down, we get a break, and it comes back and it tests the upper side of this range again. And it holds, and you finally get a break below a decent signal bar. It looked like we were going to get a setup here. It never broke lower. Then you get another one. Breaks lower. That's a perfect trade. It's a first entry, but you can treat it as a okay, I had a slight interruption there. I think we were talking about this trade. I'd probably skip that because of that EMA. But then it comes back and tests it again. It actually tested it twice. I like that. It's just a first entry, but you can treat that like a high or low, and it's also a failure as well. But that's just taking a multiple test off the inside of the range. So I think most anybody that recognizes that could take that trade. You get another second entry here. Notice the new low, first entry, second entry, but it doesn't trigger till the inside bar, and this is your signal bar, so no trade there. Triple test off the midline here, but not a good enough signal bar. And then we break out again. There's another second entry right here. It's still inside the channel, but being that far away from the EMA, if that would have been a good signal bar, I'd say take that trade. And then we just start chopping sideways. They're testing the upper side and it's holding. It gives momentarily and comes back and tests it again and gives you a second entry long here. Notice you got a new high. It's higher than that swing. So comes down here, first entry, pulls back. That's a second entry long. So if you got room to here, take that trade. You can also see how many times we tested that from the upper side. Normally I wouldn't like this trade after it broke back in like that, but because this is a little channel working down and you get a break in new low and you got a new one working up and we've already broken through up here, that kind of opens you can see this basically a failure out of a range, that a little tiny congested range there too. So there's several reasons to like that long. You got to be careful going long at the top of a bigger range like this, but it was pretty obvious we're in a bigger channel here too. So this thing's steadily making higher highs and higher lows. So I like that entry right there. Second entry long, higher low. You got the EMA behind you. You got the support behind you from the channel, the top of the channel there. That turns out to be a pretty nice trade. And then we're just chopping along again. I don't see any shorts I like there. There's a triple test here, but we hadn't made a new high yet on this channel. And the bias tends to be up slightly. So you're going to probably stick to longs. And this is all just too tight here. But then this thing fails out the bottom and turns up. I like going long on the engulfing bar. It gives you just enough room to get out. And maybe that little trap there will push it on out, and it does. And you get the high or low here, but you got to go long right into the high. It's only tested that one time and held up here. I'd wait. And if you notice, a few minutes later, you get a second entry long with a decent signal bar. It's clearly two legs back. It makes a little triple test there. Notice how we pulled back, pulled back, pulled back. So you could call that a triple test as well. I didn't draw the line, but it's there. Triple test, second entry long, nice signal bar. I mean, that's close enough to the EMA, and boom, off it goes. And it finally finds its highs here, and that turns out to be the upper side of the channel. And this is just a lower high, way away from the EMA. Again, this is advanced. You're trying to pick a top. It's not for everybody. Turns out if you take that trade, it's a great trade because you can ride it all the way back down, but it's not for everybody. Most of you would be better off to stay away from trying to pick tops and bottoms. If you're a great chart reader, you're probably fine taking that trade but if you're profitable. If you're not profitable, don't take that trade. You finally get a break here. There's just a first entry. There's just not really many setups on this. This was a nice move down, but there's not many setups. You could argue this is just a first entry. It's too congested. You might argue there's some resistance. There's a little range right across here, but I'd just wait because we've already made a new low, so you need a really good entry here. Finally, you get a first entry, second entry, and it kind of confirms that there's a flatter channel here too, so I like that one. It's just good enough for a scalp, nothing more. But it's a quick, easy scalp. Then it bounces, runs back up, makes a double top here, but notice you got a channel working up. That's the first break of this gray channel. You get a first entry, and that's a second entry on, again, it's at least a double top. Maybe you could say we tried to test it again there too. So I like that, way away from the EMA. That's another great trade. You get a lower high here, but you can't trade that as a lower high, and it's just a first entry. I don't think you can enter that on the engulfing bar or anything. And I think this is an overshoot down here, or break of the trend line, I guess I should say, not necessarily an overshoot. And this market tried all day to make a new retest of the highs, but couldn't. But we get a lot of trades in here off these tight ranges, a lot of triple tests and things. But let's zoom back in here again. I wanted to show you the bigger picture. But we push outside the trend line, and we're just chopping along. If you get a chance to go long back into that, you'd want to try it, but you don't really get anything. We just get caught up in this congestion, and finally does break out and fails almost instantly. Comes back in. Finally, you get a triple test and a nice signal bar, room back to the EMA. I like going long there. That's a quick, easy move, and you probably get a runner there if you hang on to it. Again, you're working up. You get a break here, but again, you get another second entry long. You're expecting a retest of the high. You're expecting the whole thing to maybe go higher. So I like entering there, and then you get a triple test here. And it's probably going to trap people because look how bearish that looks. People are going to think, oh, I got me a failed second entry long. I'm going short. And then they find out they got trapped because they don't know what they're doing. Stay away from failures until you're a skilled trader that you can read this chart. I mean, we should be going higher for this. We should be going higher after break of the main trend line. It looks like you don't really have this bigger blue range yet. It looks like we're just bottoming out here, and we should be going higher. So you're looking for longs, not shorts. This runs up, and again, you got another second entry short right here, way away from the. I didn't mark it. I should have marked it at least green, but I really, you don't know that we're not going higher here because you're expecting prices to go higher, not lower. But even when prices are going to go higher, they do it, they undulate, and they keep coming back to the EMA. But this thing just shoots lower again. There's another failure here, but there's not much room. I don't like that one. We bottom out down here. There's a triple test here, but again, I don't like it. And then notice you got a new low here. And you get a first entry, you push through the EMA, you pull back, you get a second entry. If it breaks above that, that's a failure. I prefer to see this above the EMA, but if it breaks above it there, you can almost guarantee it's going to trap the shorts on that second entry short right there. People that are just looking for two-legged pullbacks to the EMA because somebody else put that out there on the internet that's the secret sauce. But they don't explain. You got to know how to read the chart and understand when to take it and when not to take it. And so all these people out there know about second entries now, and they think they're the holy grail, and they just go for around the chart looking for them. And here we've been trending down, and that looks like a great place, but they don't realize we've got a break and new low, and we're reversing. And so I like that trap, and you can tell it was a trap. Look how fast that shot up, and then they tried to take it down again, and look how fast they got the shorts trapped, and they ran all their stops. And that's what happens all the way up here. And then it kind of runs out of steam. You get a triple test right here. It's tempting to go short right there because you really have a triple test already, but that little bit of stem concerns me, and you can see it did. It took one more test back up, and really what I like is the triple test of this line up here. And this actually breaks higher and turns down and gives you a big bearish bar. Definitely go short there. There was just still too much momentum right here for just I mean, you could say there's a triple test right there. I drew the line, but really these were your two highs, and so it's really just a double top at that point. And look at it go. It drops really fast. Then you get a first entry. This looks a little like a reversal, but don't trade that. Just a first entry, and then you're back down testing these lows again. That looks like a triple test, and you could treat that as a triple test, but because of that double, it's really almost a triple matching high, and the fact that this much stem, don't trade that. There's a higher low here, but it closes right at the EMA, and you could probably argue for that to be green, but that's not always the smartest trade, right into that EMA. And of course we get a higher low here, but we just came off the high, so you got to be careful going long now. You don't really want to go long right there. And this thing, and they got another little trap there. That's not a great place to try to trade a trap or anything, because you still got to go long into this. But look at it when it breaks out, it runs straight up. And you can't really go short up here without a close outside that channel. Runs back. You get a close outside, and then we're just chopping sideways here. Now, I do like this short. We made this big channel down. You got a break, and you do get a triple test here. And this does close inside, and there's a lot of stem up there. You're just trying to get a scalp back to the EMA, and maybe you get lucky and it makes another leg down. You get a quick scalp, but that's really all you get out of it. Same thing here, you break out the low side, but it's just hard to know now. Are we trying to go higher for the green? Are we trying to go lower? We're just kind of stuck in this range, in this congestion. So you might go long there. It's another one that could be green, and then this could be green too. But you're almost, when it makes those new lows and closes outside like that, you're almost always better to wait on a new low. And you just don't, or a new high, or a higher low. Higher low or lower high, and you don't get that on either one of these. Another failure, but no signal bar. And there's a hidden second entry here, but we've already got the break and new low on this khaki channel, and we've had the break and new low now for this, so we might turn back up here. So you got to be real careful. But there is a second entry short right there, and it's a failed breakout. It's another one. You know, you could argue to be green, but just wait on something better than that. And here we are, and you get a triple test, and this one closes inside. I like that one. And you're just looking for a scalp here, but this one takes off. You get a runner on that one most likely. And then there's another second entry here, but you have to use this one for the signal bar, and it's just too close to the lows. Then we bounce out of here off the lows, but that's not a good enough signal bar. Too far to be a higher low, no reversal. But a few minutes later, you get a second entry here on the first break. Take that. You get it, and then a few minutes later, you get another second entry. So you get your break and two legs up, right back up to the higher part of the range. And then this turns down off the highs. It's not a second entry, even though there's two legs up, because this is actually first entry, second entry. third entry, fourth entry, fifth entry. So that's like a sixth entry. So it's not a second entry. So you can't really trade that. You might say, okay, it's a turn down off the range, but you don't necessarily have a triple test up there. It's just a double top, and it's late in the day. So I don't think there's any other trades in there, and then we're into 230. So this stuff is tough trading here. You got to have a little experience, and you got to be a decent chart reader. Now some of those, there's a couple of triple tests in there that are obvious. There's a couple of second entries in there that are obvious. But for the most part, this is a little tougher trading because we're not turning at a consistent low or a consistent high each time. And that's what gets you. So you gotta, when the market trades at a consistent spot each time, it makes it a lot easier. But it's going to be interesting to see what happens tomorrow. The market hadn't opened back up. It's 10 to 5, so it opens back up in a few minutes. But I'm going to wrap this up, get this processed and uploaded for you, and we'll see what tomorrow brings. This market's scary because it won't. If you're day trading, it's not that hard because you still get good moves. And you get consistent moves that are, it gets spooky when it's like this. You got to be real careful. You want a nice, easy, consistent range, and you need to be a little more skilled when it's making inconsistent highs and inconsistent lows, but it's still consistently sideways. It's just volatile. Nobody knows what to do. One minute they think it's going higher, they jump on, and then it reverses, and so they start getting short. They jump on, and then it reverses. And it just chops people to pieces is what happens if you don't know what you're doing. So you got to be really careful. So what's tomorrow going to bring? I don't know. Again, I don't think they're going to let this market sell off in any big way unless it just gets out of hand and they can't control it. And I don't know that that's going to happen. But the inflation is still here. I don't care how many times Biden or anybody or the Fed say that they got a handle on it, they don't. And it's obvious because the numbers are showing you, and these are always fudged. They're always worse than what they show you, and they'll revise it sometime and later down the road. They'll revise it, and you'll never hear about that, and it'll find out it was worse than what they told us because they don't want this market to crash. So it's all smoke and mirrors. They don't even include the most basics. I mean, that's the thing. They've changed these numbers too. That makes it to make them look better because they leave out a lot of the basic stuff like groceries and things like that. But everybody knows if you go to the grocery store, it's the biggest place we've had inflation of all. That and gas. So don't believe what they tell you. Don't listen to the news. Go do your own research. But anyway, there it is for today. That's the way I saw it. I mean, it's really just kind of one big range with it had an upward bias here for sure. They were trying to take all this back and finally, and they tried it again and again and again and again, and they couldn't do it today. So does that mean something's changing? That maybe mean more people are getting smart and dumping their stocks now. We're at an all-time high. Now's maybe the time to start taking profits. It's my opinion they're going to try to prop it up and not let it sell off. So it just depends on how heavy the selling gets. If it gets out of control and they can't keep it propped up, it's going to crash. I'm not going to say it's going to crash, but you're going to get a hefty correction. So it's hard to know what's going to happen because you just can't trust the numbers. You can't trust the information. All you can trust is what you see on this chart. And that's the beauty of being able to understand price action and be able to read the chart because that's all that matters. If you can read this, you got everything you need. It doesn't matter if somebody lies to you in the news or somebody gives you false information because it doesn't affect you because you're looking at exactly what's happening on this chart and it doesn't lie. Never argue with this chart because it's always right. It's the only thing that's 100% right that you can count on to tell you the truth. And even this in the big picture is smoke and mirrors because it's manipulated. And everybody may not agree with that, but you can't tell me this market's not manipulated. I 100% believe it's manipulated. I don't care because I can tell where it's going because the price action never, as long as I've been doing this, even if it's been manipulated, it still works. So it doesn't matter. Let them manipulate it. They can't fool us on this side because we can read the chart. So as long as it's trending, or even if it's ranging, if it's consistent range, we're going to capitalize on it. But if as long as there's a little trend, we can trade that trend and we can make money off of it. So we don't have to lock in and hope it's going to go up every day or go down every day or whatever. We're just trading for we're just waiting for moves and trying to get a little piece of them. That's all we're doing. And you can do that if you're good enough at reading this chart. So anyway, long chart lesson today. A lot of talking here, a lot of different things, and most of this is just my opinion. Take it with a grain of salt. Do your own research. Come to your own conclusions. Don't trust me. Don't trust anybody. Study the chart and do your own research because people will lie to you. Anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. And believe it or not, tomorrow's Thursday. That's going to wrap up our week. I do have my cruise coming up again. I'm leaving on the 18th early in the morning. So the 17th, whatever day that is, will probably be the last of whatever we do and I'm going to be gone a couple of days that week and then all the next week. So again, I haven't looked at the calendar, so I don't know. Let me just do that real fast. The 18th is on a Thursday, so I'll probably have a regular day on Wednesday. I may leave here early, but I'll still try to do the chart lesson, and there won't be one on Thursday. So we'll miss one chart lesson next week, and we'll miss all that next week. And I'm supposed to be back Sunday, so barring no flight problems or something crazy happens while I'm out on my cruise, I'll be back Sunday, and I'll be back in the office about Monday morning the 29th. So yeah, we'll miss one day next week, one chart lesson, one mid-morning report. We'll miss Thursday basically, and then I'll be gone the whole following week. So just put that on your calendar and be aware of it so you don't wonder what happened to Mac those days. And I'm going to wrap it up for today. This is getting too long. So anyway, I hope you had a good trading day. We'll see you tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.